Hello everyone, investment scams rampant. Please vigilant and discerning. Do not trust information from unknown sources. Please make sure recognize two official Capital Securities community, Facebook, Capital Securities, YouTube, Capital Wealth Insights.
Hello, everyone. Welcome to You On a Good Evening Watch on Monday, February 23rd. I'm analyst Jang Jita. Please remember to like, subscribe, and share for us. If you have any investment questions, feel free to leave me a comment. If I don't have time to answer today, I'll follow up with everyone in tomorrow's class. This week happens to be the first working day after the Lunar New Year holiday, so just a reminder, even though we have the 2/28 Peace Memorial Day long weekend coming up, the Taiwan stock market will be closed on Friday. The stock market will be closed, but You Want a Good Evening will still be online as usual to chat with everyone about the market. So on February 27th, yeah, it should be the 27th. After that, on Friday, we'll still be holding You Want a Good Evening as usual. All right, good evening, everyone. Hello again. After a 9 or 10-day holiday, actually, I was already live streaming last week. Last Friday, we did a live stream online using just audio. I'm not sure if you all tuned in to listen. Last Friday, February 20th, happened to be the fourth day of the Lunar New Year. During last week's live stream, I spent about 15 minutes talking with everyone about a new teaching topic, which was the Granville's 8 Rules. Also, check out Dongfang Zin's 5 major trading strategies from our February 20th live stream for more teaching content. Today, we're focusing on the latest tariff war developments that the market is watching. This has been the main global focus lately, and soon I'll provide a deeper analysis. Hi Huijuan, Brother Yulun, and Maida Daisy. Maida Daisy's back in hot Kaohsiung. The weather here in Taipei has been pretty nice every day too, but it's not as hot as it is in Kaohsiung. Alright, so good evening to Yawan as well, and hello to you, and also to Alice Fool and Caesar 911 staff. Good evening to the staff, good evening. And who else is this? Shwedi Yu Yang. Hey, is this a new viewer? All right, I see someone from the seaside. Good evening to the seaside. Good evening. Can you talk a bit about Zibong? Zibong is part of the Taiwan stock market. When it comes to Taiwan stocks, we probably don't have much time or aren't really able to analyze them on the Good Evening show, because our Good Evening program mainly focuses on international markets, especially the US stock market, and some overall fund data. As for Zibang, since it dropped today, does that mean it will go up again tomorrow? That's really hard to say, and on the show we can't directly tell everyone whether it will rise or fall tomorrow. But if I remember correctly, Zibang has some kind of theme or concept. Was it low-orbit satellites or something else? I can't quite remember, because when it comes to Taiwan stocks, I spend 1 week watching Taiwan stocks and the next on the US market, alternating. During these group live streams, I rarely check Taiwan stocks. When tracking them during the day, I usually visit the branch office to share insights, so I focus there. So if I get the chance to do some seminars at the branch in March, I'll do some analysis for everyone then, okay? Whether it's about Taiwan stocks or US stocks, I'll cover both. So that's just a quick answer to the question from our friend Haibian, since Shabang is more focused on Taiwan stocks, and the analysts in the morning usually have more time to do analysis. All right, good night, little donkey. Happy New Year, Happy New Year. Okay, let's take a look at the main investment highlights. Let's chat a bit. If you hear me slurring my words or getting a little stuck while I'm analyzing the market today or this week, that's totally normal. Why? Because these past few days, especially today, I've bitten my cheek while eating. Bit the same spot about 3 times in a row. So now when I talk, I'm kind of slurring my words, you know? There's a bit of bleeding. That's because I've bitten the same spot in my mouth 3 times, probably from eating too fast. Anyway, just wanted to share that with everyone. Now, let's take a look. Are AI high-speed switches related to the AI sector? Thanks to the person by the seaside for the extra info. Good evening, everyone. First, let's check out today's investment highlights. The first thing is whether Trump's tariff war will stay limited or expand further. This is a major focus in the market right now. Actually, before the Supreme Court made its ruling on the tariffs, I don't know if you remember, but we mentioned before the decision came out that no matter if the ruling was favorable or not, there were basically 2 possible directions to consider. We talked about this with everyone a few days ago. If the ruling is that the tariffs are valid, then what happens next? If the ruling is that the tariffs are invalid, then what should you do? Should you be overly optimistic or overly pessimistic? Actually, there's no need for either extreme. I'll explain why in a moment. So is the tariff war really just about that? And what about the Supreme Court? It ruled that Trump's use of IEEPA, this method to impose reciprocal tariffs globally, whether it's on semiconductors or traditional industries, it's all the same. The act of imposing these taxes has currently been ruled illegal, but does this ruling mean that Trump's implementation of tariffs will just come to a sudden halt, or does he still have other options? If he does have other ways, then how should we view this whole tariff war? Is it a positive or a negative? That's what we're going to talk about today. After our discussion, you'll really see things clearly, seriously. Also, today I want to update everyone on some of the major data releases this week and share some news. As for the industry side, we still need to keep an eye on NVIDIA, the leader in AI, and look at the overall changes in the industry. Why is NVIDIA shifting to smaller scale investments? Who exactly are these small investments for? For example, before investing in OpenAI back in September last year, NVIDIA had said it planned to invest nearly $10 billion in a partnership with OpenAI. But right now, it looks like the amount for this partnership has been drastically reduced to $3 billion. So what exactly happened? Could there be some obstacles in the so-called perpetual motion machine of AI? Today, I'll fill everyone in on NVIDIA's small-scale investment situation from the original $10 billion. What should we do now that it's dropped to $3 billion? Of course, if the rich parent decides to lower the investment amount, who are his investment subsidiaries, his sons and younger sons? That would be CoreWeave, CRWBOK, which has also run into some investment-related controversy. These issues are linked, so whether AI is a bubble or sustainable is worth watching. Tonight, I'll share my thoughts on the news, so stay tuned. First, let's check the data points out at 11 p.m. They're pretty neutral and shouldn't have much impact on the market. One of them is the U.S. factory orders for December, month over month. The previous figure was 2.7, and the forecast is minus 0.5. This is December data, so honestly, I think its direct impact on the market is pretty limited, since we're already almost in March. So just take note of this data when it comes out at 11 p.m. tonight. Also, at 11:30 p.m., there's the Dallas Fed Business Activity Index for February. The previous value was minus 1.2, and the forecast is minus 0.8. This data is even less important, so for both of these, just take a look if you're interested, but honestly, they won't have much impact on the market. Good night, Debbie Line. Good night, David Line. Now, moving on. I'll let you know when there's more important data. This week, the key data points are first tomorrow and second on Friday. So there will be more data coming out tomorrow and Friday, but today is actually pretty quiet. Just check out those two data releases at 11 and 11:30 tonight, and that's enough. Of course, the most important thing is the economic data today isn't really that important, but international events are something everyone should pay special attention to. The first thing, of course, happened last Friday, right after our live stream ended. Last Friday, I talked for almost an hour and 4 minutes, way too long. After I finished talking, I noticed that as soon as I got off the show, a message popped up saying that the U.S. Supreme Court. So what happened? Regarding Trump's use of the IEEPA, his stance on using this act to impose global tariffs, the Supreme Court finally ruled that this was unconstitutional. To put it simply, the IEEPA, which stands for the International Emergency Economic Powers Act, has a really long name in Chinese, but you don't need to remember all that. The point is, this act can't be used anymore. This act let the U.S. impose taxes globally on any industry or tech. Bypassing Congress, the president could unilaterally impose tariffs, but the Supreme Court disagreed. In reality, the president's power isn't so great that he can just impose taxes on the whole world. There still have to be requirements about what kind of tax rates are set and how long these tariffs or taxes will last. In fact, for some acts, you actually need Congress's approval. It's not as simple as the president just deciding on his own. So in the end, the Supreme Court ruled that Trump's use of this act to impose tariffs was unconstitutional. All right, so since it was ruled unconstitutional, does that mean Trump is out of options? Actually, not necessarily. Right now, it looks like the U.S. might not be able to impose these tariffs because of this ruling. Looking ahead, over the next 10 years, there was supposed to be nearly $1.4 trillion in tariff revenue. Maybe that's just not going to happen. And on top of that, about $175 billion in tariffs have already been collected. But now, with the Supreme Court ruling this as illegal, what's going to happen to that $175 billion that's already been collected? Is the government going to give that money back? Do they have to return it? Will Trump give it back? I don't think so. I really don't think so. Why? Because they'll find another way to keep that money. After all, it wasn't easy to get it into the pocket in the first place. Trump's a businessman. Remember that. Trump's a businessman. Money that was so hard to get into his pocket, if you want him to take it out again, there has to be a really good reason. Or there needs to be an even bigger benefit or a bigger threat to make him give it up. So let's get this straight first. Last Friday, the Supreme Court already ruled that Trump's global tariffs were illegal. So now that it's been ruled illegal, what happens next? After it was ruled illegal, did everything suddenly become smooth sailing, with the whole world celebrating, cheering that there would be no more tariffs and the stock market and economy soaring? Not exactly. Why is that? Let's take a look. Actually, Trump... Oh, good evening, Melissa. Oh, hello. Happy New Year. Hi, David Light. So about Trump, actually, even though he didn't use tariffs, he immediately said that from now on, he would use things like Section 232 and 223, invoking national security laws and positions related to national security to impose tariffs. Section 301 is more well known. It's used to investigate intellectual property rights issues and then take tariff actions against any country or industry that violates Section 301. So in the US, we would impose tariffs on them. He said that in the future, the Section 232 clause and the Section 301 clause would all remain unchanged, meaning the tariff rates that should be imposed won't be reduced. Also, he did criticize that the courts haven't dealt with the issue of refunding taxes after they've been collected, even when you claim it's illegal. IEEP makes it illegal, but no process exists for refunds, and courts remain silent. Trump noted that lawsuits may follow over this $175 billion regarding full or proportional refunding. Or will some industries get refunds while others won't? Actually, none of this was addressed in the court's ruling this time. So whether there will be refunds, how much, for how long, how much to refund, and which industries are involved, none of that was mentioned. In other words, when it comes to this $175 billion, I think it's going to be very hard to sort out in the short term. It's also really hard to say who should get a refund or what proportion should be refunded. It's extremely difficult. Once the government has the money, it's hard to get back, and the court didn't specify refund methods. So, what's next? Sections 232 and 301 remain active, and now Trump is introducing Section 122. Don't worry about the details, just remember 232, 301, and 122. You only need to recognize the act names. Section 122 is interesting because the president can take direct action without Congress. He has the authority to do it, but the percentage, the tariff rate increase under Section 122 has a maximum cap of 15%, and the duration, the time limit, is 150 days. So if you divide 150 by 30, that's about 5 months, just under half a year, during which you can impose it. After 6 months, extending it requires Congress. Trump said alongside Sections 232 and 301, Section 122 will be included, allowing a 15% global tariff. It used to be 10%, right? He said, it used to be 10%, but now I'm raising everything to 15%. This 15% will officially start being enforced on February 24th, which is tomorrow. So what does this mean? This is why, before the Supreme Court has even made a ruling, we've already told everyone that if the ruling is that Trump's tariffs, let's say these global tariffs, are valid, if it's ruled to be legal, there's no need for everyone to be overly pessimistic. Why? Because even before the Supreme Court has made a decision, Trump was already imposing these tariffs. Many countries around the world are already facing tariffs averaging between 15 and 25%, some higher, some lower. For example, if countries like Taiwan, Japan, or South Korea increase their investments by $350 billion to $550 billion, their tariff rates might drop from 25% to 15%. For instance, some imported cars from Taiwan even have zero tariffs. So there are different conditions for different cases, but overall, the total average is about 15 to 25%. That's the main point here. If, say, the Supreme Court rules that Trump is legal, then it's legal, because it's always been about 15 to 25% anyway. But if, like this time, the ruling on Friday says it's not legal, does that mean everything's wide open? Not necessarily. Why? Because when it's ruled illegal, you shouldn't get overly optimistic. It could actually turn into a case where all the good news is already priced in. Why do I say that? Well, think about it. First of all, you're talking about 15 to 25%, and you say, okay, the government has the authority and the court declares it's not legal. So if it's not legal, like I just said, first of all, how do you refund the money? Who do you give it back to? Which industries get the refund and which ones still have to pay? And now Trump is saying that even if the IEE can't distribute, if EEPA can't be used, 232 can still be used, 301 can still be used, and 122 can also be used. So in other words, this 15 to 25%, it's just that the left hand, i.e. EPA, can't be used, but the right hand, 232, 301, and 122 can still be used. So does this percentage really make a difference? I think it doesn't make much of a difference. The only question is whether this percentage will fall within the 15 to 25% range. And secondly, like I just mentioned, Section 122 has a time limit for imposing tariffs, which is 150 days. What happens after those 150 days? Well, that's something to be discussed later. So it ends up having a time limit. It's not valid forever, not at all. So looking ahead, honestly, whether this is legal or not, to be frank, it doesn't have that big of an impact on the market. It's not that big of a positive boost either, but if one day they rule that it's legal, it's not going to be that much of a negative either. Why? You have to remember this. Right now, whether it's the Supreme Court ruling it legal or not, or whether Trump wants to use the old IEEPA or the current 232, 230, or 12, everyone needs to remember one thing. Right now, it's been declared that imposing tariffs is illegal, right? So he can't just back down and lose face. So he has to immediately announce that there are other laws that can replace the original IEEP. Okay, so after this replacement, just remember one thing. After the replacement, it's going to be a 15 to 25% tariff. I don't think this argument is going to change much, basically. There probably won't be much change either, but do you think he'll stubbornly keep imposing tariffs all the way until the midterm elections are over? He won't, and why is that? Because elections depend on polling numbers. So in other words, whether the tariffs are imposed legally or not, ultimately, he's constrained by polls, livelihoods, inflation, and interest rate decisions. So what's next? He'll just backtrack. Looking at past examples, it's happened repeatedly since last April. He constantly repeats this act of backing down. Trump says, without what I want or cooperation, I'll slap on more tariffs today. But eventually, his tariff scope shrinks, and for his original targets, he ends up saying, fine, I won't do it. Maybe there are exemptions, or with U.S. investments, America will just exempt you. He might even lower your tariff rate. So this is always Trump's tactic. He starts off really tough, but in the end, there's always some negotiation. There's always some compromise. The key point is, because there are midterm elections at the end of this year, so when everyone looks at this bill, that's something to keep in mind. As for the Supreme Court, even though it declared it invalid, like I said before, don't be overly optimistic. Really, don't be too optimistic. Because whether it's valid or invalid, the process is actually the same. The process is the same. Just because they announced it's invalid today doesn't mean the way things move forward is going to be completely different from before the new year. It's not like that at all. Basically, to put it simply, it's just the same old thing in a new package. If the left hand can't collect it, then the right hand will. That's pretty much it. The only difference is the percentage they collect. How much does each country or industry get? And what about school enterprise partnerships? Is it 150 days, 30 days, or even longer? That's the difference. So to answer, just like we discussed before the show, like who was it? Made Easy. Oh, and hello to Feilu and Jipu Lin. Good evening. Hello. So Meidaizi asked, if this tax really starts tomorrow, and if they impose a 15% tax, will the global economy be thrown into chaos? Actually, it won't. Why not? Because before the new year, the tax rate was already about this percentage. Before the new year, it was around 10%, 15%, up to 25%. So even if after the new year, you set it at 15%, more or less, it actually doesn't make that much of a difference. So will the economy be shaken up? I don't think so. I don't think the economy will be shaken up. And plus, there's an election at the end of the year. So Trump is just going to get more and more tough. If he really goes all in and inflation really spikes, or if some companies see their component import costs go up, then when costs rise, manufacturers can only absorb so much. Ultimately, they pass those costs to consumers. With CPI around 2.2 to 2.5, prices for things like PCs could hit 2.9 or 3%. So if they keep doing this and inflation keeps rising, won't it make it even harder for the Fed to cut rates in the second half of the year? That's why I don't think they'll go too hard on this. So that's just a quick explanation about the tariff part for everyone. Good evening, everyone. 6314. All right, let me answer that too. Hey, good evening, Lucy Yang. Good evening. Yeah, gotta take care of your tongue. That's right. I don't really know why either. Maybe it's because I used to be in the habit of chewing on the other side, and after a while of chewing and chewing on one side, well, doctors always tell us that when we eat, we should switch sides and alternate, not just use one side. If you keep using the same side for too long, you'll notice you stop chewing on that side and might bite your tongue or cheek. That's why I've had mouth ulcers lately. Next question. If Jeff is online, I'll answer his now. Last Friday, he saw us talking about that topic. Recall the 8th rule of the Dongfeng Line's 5 strategies. US stocks use 20 and 50-day moving averages, while Taiwan stocks use 22 and 60. Why the difference? It stems from local market habits. In Taiwan, some use 20, 22, or 24-day averages, and for quarterly lines, 50, 55, or 60. Ultimately, choosing 60 or 22 depends on your personal preference. When I'm doing analysis or research, I often find myself testing things out, trial and error, tweaking the parameters as I go. I've found that using a 22-day moving average for the current month tends to be more neutral. If I use 20, I feel like the fluctuations are just too big. 24 is too slow. I'm talking about the Taiwan stock market here. I think 60 is more stable. This is just my personal approach, so you can use it as a reference. Of course, some people might be used to using 20 or 24, and that's fine too. Just see which moving average parameter you prefer, which one you feel is more accurate, whether you're applying it to individual stocks or indices. If you find one works better for you, just stick with the parameter you're comfortable with. Personally, I prefer using 22 and 60, but actually, 22 and 60 aren't really suitable for US stocks. That's because when people are trading in the US market, what's more commonly used is actually the monthly moving average. They tend to use 20. Then for the quarterly moving average, they use 50. And for the yearly, they use the 200-day moving average. These are kind of established conventions, sort of habits that everyone agrees on. So you really shouldn't just tweak these numbers a little bit. Don't pick some weird number. For example, let's say the monthly moving average is usually between 20 and 24, but you insist on setting it to 30 or 35. That would just be odd. Because in a month, if you take out Saturdays, fun days, and national holidays, on average, there are about 20 to 24 trading days in a month. So if you set it to 30 or 35 days each time, it actually loses its relevance as a reference. Not necessarily that accurate. So when you're setting your parameters, you can pay a little more attention to this. So this is to answer Jeffrey's question about why we use 20 and 50 or 22 and 60. That's the reason. That's how it is. One day after I finished the show, I happened to see your comment. So when I saw you online today, I thought I'd answer you. Okay, that's the part about Trump. Now, as for Bostic also mentioned that the court's ruling declaring global tariffs invalid, the biggest issue he thinks this affects is whether or not that $175 billion we just talked about needs to be refunded. So did he mention the refund? He said if it happens, the economic impact would be massive. He likely consulted the court, treasury, or government, stating that from the Fed's perspective, refunding that money might not be good for the country because the disruption would be too great. And let me put it even more bluntly. Back then, Trump imposed tariffs of 15% to 25% on different industries in various countries, right? On average, those 15% to 25% tariffs brought in $175 billion. Okay, and now they're saying those tariffs can't be imposed. Same for APM. If IEEP fails, I'll use 232, 331, or 112. If those work, can I still tax 15 to 25%? Exactly. So why refund that $175 billion? No need at all. Do you get what I mean? If I can't impose tariffs using Act A, but I can do it with Act B, then I'll just use Act B. If I can impose tariffs with Act B, then why would I remove the tariffs from Act A just to put them back again? That would be a pointless exercise. So, in my opinion, this $175 billion, first, getting this money back is a huge hassle. Second, if Act B can just replace Act A's tariffs, the result's the same. As the experts said, rolling them back has a huge impact, so they likely won't. In other words, you can't make it retroactive. As for whether Trump can continue to use 232, 301, or 122 to keep imposing tariffs in the future, I think he still can. It's just that the duration and the scale of the tariffs will determine how much of an impact they have on the industry. That's the only difference. But how big is that difference really? Actually, the whole market has already factored it in. It's been within the expected range for a long time now. That's why you can see the yield on the US 10-year Treasury bond. It's still at 4.07, and the multi-year rate is at 3.08. Honestly, there hasn't been any major fluctuation. Some people are worried, and I saw some of those media outlets collecting opinions saying that everyone is concerned. Oh, if Trump comes back, the $175 billion in national revenue will be gone, will be withdrawn, and then what? Then there's this year's tax rebate bill, and on top of that, the $1.4 trillion in tax revenue will fall through again. So people are saying the US government might be strapped for cash. At a time like this, maybe the US will have to take drastic measures. Lacking funds, the city borrows more, so bond prices drop and yields spike. But have yields actually spiked? No, they're still at 4.07. Despite this, they haven't hit 4.5. So looking at the big picture, this isn't going to seriously impact the US government's finances. It's not as bad as it sounds. If you understood what I just spent some time explaining, you'll know that Plan A can't offset it, but Plan B can. So the money will still stay within a part of the US government. Trump and others have many tactics, but this one's impact will weaken due to the midterms. For 2026, the debt ceiling lowering frequency remains at 2.23 times. People fear the first occurrence, care less the second, and by the third time, the market becomes completely numb to the same trick. That numbness is just like every time, who what? Talking about this, like the first time, the second time, this is the example I always use. Actually, whether it's about tariffs or a lot of other financial ups and downs, it's all the same, right? It's just like Saint Seiya, you know, that Japanese anime? If you've seen it, you know what I mean. I always use this example. Every time when you use the same move, no matter which Saint Seiya you hit with the same move, the first time it does damage, but the second time you use the same move, it doesn't affect him anymore. He's developed a defense against it. The whole market economy works the same way. In other words, take the 2008 Lehman Brothers collapse, for example. If something like that only happened once, do you think the global economy and governments could handle it? I think they could, because now we have experience. The only concern is about things that nobody saw coming. It's the things that have never happened before that are more troublesome. Those are the things that are really tricky. Hello, 000. Does the unconstitutionality of the guest tax apply to China as well? If it does, the bargaining chips between China and the US would change significantly. What kind of impact would that have? I think the impact wouldn't be that big. Not really. Everything will have some effect, but just like we mentioned earlier, if Plan A can't be used to restrict, then Plan B can still be used. So Trump will find thousands and thousands of bills to carry out the actions he can take to impose restrictions. So even if there are some things in the US-China trade war that he can't restrict due to lack of legal support or because it's illegal, does that mean Trump has no tricks up his sleeve? Of course not. He still has plenty. There are tons of ways to impose restrictions, like on advanced chips or deciding whether or not to export certain things to the mainland. He might ask Europe, other countries, or Japan to restrict their advanced manufacturing equipment or chips from being exported to China as well. He has a lot of tricks up his sleeve. Really, a lot. I think it was at the end of March, right? From the end of March to around April 2nd, it seems like Trump is supposed to visit mainland China. So when the time comes, we'll see if his visit to China will result in any more constructive trade agreements. I think it probably will, because, after all, he still needs to have some policies and political positions to show. There are some things, let's say, that he could bring back with him. If he does come back with some achievements or policies, it would have some impact on the midterm elections at the end of the year. It would give both the voters and the Republican Party itself something to adjust to or account for. So, if he really does have a conversation with Xi Jinping at the end of April or early April, will it be really tough and rigid? I don't think so. He'll probably look for some. Both sides likely want a trade plan that allows a graceful exit. The US dollar index fell 0.24%, remaining weak and volatile. Note geopolitical risks. As discussed Friday, Iran is currently a gray rhino or black swan event. Now, the USS Ford, the American aircraft carrier strike group, has entered the Mediterranean. Whether the US and Iran can keep negotiating and find a better direction remains to be seen. I think we should keep watching and waiting. As for Trump, will he actually launch some limited, targeted strikes on Iran's military facilities? We don't know yet. At the very least, Trump has said he won't go for a full-scale war. So I think this move, keep in mind, war would spike oil prices, driving up inflation. If that happens, rate cuts are off the table. This policy might not actually help Trump since he wants lower rates. If oil prices jump and the Fed can't cut, he'd be contradicting himself. It's a strange situation. So regarding the US and Iran, whether or not something positive can come out of the nuclear agreement, we'll just have to wait and see. Of course, we can't rule out the possibility of some unexpected factors coming into play, so just keep this in mind. When it comes to investing, remember not to go all in. It's safer to keep about 20 to 30% of your portfolio in cash. Crude oil fell 1% today, but stays above its 200-day average as US-Iran conflict fears persist. Tonight's minor economic data only needs a quick look. Tomorrow, there will be some real estate-related data, as well as wholesale sales monthly rates, the Conference Board Consumer Confidence Index, and so on. The main thing is that tomorrow night, a lot of officials will be giving speeches. Tomorrow's data is more focused on real estate, but the officials speaking include people like Goolsbee, Bostic, Waller, Cook, and Chris. Even Trump's State of the Union address is included, and there's a chance some announcements might be made. So after Trump faced the tariff war and got slapped down by the Supreme Court, will he make any announcements in the State of the Union? Will he offer a better countermeasure? We'll wait and see. If the State of the Union mentions anything tomorrow, we'll follow up. Also, reciprocal tariffs rise from 10 to 15% tomorrow. That's it. The impact should be minimal. Looking ahead, Wednesday has Eurozone CPI. Thursday brings weekly travel data and Nvidia's earnings early on the 26th. Watch that closely. It's the final Big 7 report this season. On February 27th, key U.S. data includes monthly and yearly PPI plus the Chicago PMI. The PPI is likely this week's most vital metric. While it's important, inflation probably won't get out of hand, at least based on current trends. From the CPI and PCE to Friday's PPI, it looks like at most the numbers are just a little higher than expected, maybe about 0.1% more, or right in line with expectations. That's about it. There's really no sign of things getting wildly out of control, so inflation right now just seems sticky but not drastically out of control. Now, as for earnings reports, tomorrow, let's keep an eye on Home Depot. And then on the 25th, there's HP, Warner Brothers, and the 26th is pretty important too. On Thursday, we've got Nvidia and Salesforce. And then on the 27th, there's Dell. And on the 28th, Best Buy's earnings report. When these companies release their earnings, I'll go over them with everyone. But what's most important are the ones highlighted in red. Those are the key ones to watch. Starting in March, many new earnings reports will drop, and we'll track them. Through February, the key ones are Nvidia, Salesforce, Dell, and HPQ. Watch those, especially Nvidia. As for AI, aside from the earnings report from the industry leader being released on the 26th, there's another very important player in AI, Google. Let me add something about Google from the industry perspective. What did Google say? They said they've launched the Gemini 3.1 Pro version. Has anyone tried Google's Gemini? I've heard it's pretty good. Its features and performance are solid, and the things it produces are quite impressive. When the third version of Gemini, the 3 Pro version, came out, it was really well received in the market. Even the TPU chips and so on, whether it's Amazon wanting to use them, Meta wanting to use them, or collaborating with Google. Who was it again? Was it Qualcomm or Broadcom? I think it was Broadcom, which specifically designs Google's TPU chips, if I'm not mistaken. Right, Broadcom. So that's why the Gemini 3.3 did so well. It sold well and was well made, and the market really supported it. Because of that, all the related supply chains and companies wanting to collaborate with them have also seen their value rise. As for Google, among the tech stocks, its share price has been relatively resilient and stable. Version 3.1 is out, featuring 31% better performance than before and beating DeepSync by 45%. You should check it out. Its music model turns text into songs or generates music matching your uploaded photos and videos. AI has so many features now. I think it'll soon handle document processing too. Or even jobs like translation. Those will basically be completely replaced. Translation work is also being taken over. And then for people who do planning, write copy, or work in marketing, those jobs will probably all be replaced too, because AI can do all of that. ChatGPT, Gemini, honestly, their copywriting abilities are just too powerful, seriously. Music generation is impressive and will likely affect all music creators. Thinking about how to use these AIs to improve your skills is now crucial. While the 3.1 Polo version is out, Google, the strongest of the 7 giants, has been taking a break lately. As for this break, you can see it as a correction after a big rally, but it doesn't mean it's turning bearish. You can treat it as a pullback after a strong rise, but it's not a sign of a downturn, okay? And about Avago, yes, that's right, it's Broadcom. All right, Gemini. Some people say Gemini isn't accurate, so it's not good to use, right? You guys should just try it out for yourselves. Actually, I found that whether it's Gemini, Anthropic, or even GPT, they all have their own strengths. But there's one thing everyone needs to remember. They're really useful, but they're... As for accuracy, everyone still needs to cross-check and observe from different angles. We've talked about this before, because after all, AI right now pulls a ton of information from online databases, then combines it and runs calculations to come up with an answer. If there's wrong info online, the AI's answer will be wrong too. It's never fully accurate, so whether you're writing reports or copy, you must check everything yourself. What might you find? Maybe a wrong closing price, moving averages, or industry data like EPS. Don't trust AI completely. Its info isn't always accurate. For instance, if it's February 2026 right now, if you ask for February's data, it might fail. It might only provide last year's end of year data. You might mistake it for the first quarter, thinking, oh, this is last year's data, but you don't realize it and think it's the latest report. That's a mistake. When you get this information, whether it's closing prices, EPS, or industry news, don't just take it and show it to others or send it out right away. Sometimes you really need to carefully consider and check whether what it says is correct, including economic data like CPI or PCE. It's all the same. Review it carefully. You might think AI has organized everything, but it's not 100% accurate. Always remember that. As for Google, there are no major issues with its fundamentals. So what about this? If version 3.1 is released, it might also create a pretty good and popular trend. Everyone can try it out and see how it works, but you have to remember not to trust it completely. Seriously. As for Google's stock price, in the short term, it's basically a pullback and correction after a big rise. Remember to pay attention to this neckline below. This neckline has been extended from last October to now. As for the price level, you can just look at the screen. It's clear and obvious. You'll know exactly where this neckline is in terms of price. Watch this neckline. If it holds after consolidating, it could still go higher. Short term, technically, it looks like a pullback after a rally. Notice the two moving averages are curving down slightly, but it's not a sharp downturn, like the 50-day average. The 50-day moving average is just flattening. Overall, I see this as a correction after a strong rally. Since the neckline holds, there's no need to worry. In early February, a touch of this neckline led to an immediate 5% bounce, so treat it as strong support. That's Google. For NVIDIA, their original $100 billion OpenAI investment was cut to $30 billion. How should we interpret this $30 billion reduction? All right, so this actually means something. What does it mean? Well, before the Lunar New Year, I don't know if you all noticed some of the news, there were people saying that NVIDIA had some reservations about OpenAI's Altman, saying maybe he doesn't know how to manage or doesn't understand competition, things like that. Then Altman from OpenAI responded by saying, hey, NVIDIA's chips are really expensive right now, so we might consider buying AMD chips or even using Google's TPU chips. There have been some rumors going around, but I think where there's smoke, there's fire. What I mean is, there are rumors suggesting that these two CEOs seem to have some reservations about each other. Even though they're still working together, it feels like their partnership isn't as smooth as it used to be. The closeness and compatibility between them just isn't as deep as it used to be. Of course, both leaders from each side have come out and said, no, we're still very happy to keep working together. Yeah, of course they have to say that, right? I mean, they can't just come out and say, I just don't like OpenAI or Altman. And Altman can't say, obviously he can't say, NVIDIA's so expensive, ridiculously expensive. I want to go buy AMD instead. They can't say that publicly, so their actions differ from their words. There's always a workaround. Last year, they discussed a $100 billion letter of intent, but now it looks like they'll only invest $30 billion. So yesterday, they announced a $30 billion investment. And this $30 billion investment, in a way, you have to realize everyone needs to know that this $30 billion investment also kind of lets people know that NVIDIA might be investing too. The way they're positioning themselves isn't as over the top as last year. Back then, everyone was all hyped up, like, what is this, a perpetual motion machine? NVIDIA invests in OpenAI, then OpenAI goes and invests in Oracle, then Oracle buys NVIDIA chips, and the cycle just keeps going round and round. But in the end, it turns out Oracle can't keep up because Oracle's cash flow, specifically their free cash flow, or FCF, was actually negative $10 billion last quarter. They're struggling to get cash flowing. If they can't keep things moving, it's a problem. If they default on their debts, this whole perpetual motion machine will fail. Because, simply put, a single company in the chain can't fail. If that happens, you'll lose all credibility. Looking at this year, many big CSPs have been ramping up capital spending. All right, so for example, Microsoft said they're going to spend what, $120 billion, right? Meta said $130 billion, and Amazon is even more shocking. They said $200 billion. Google said around $180 billion. So each of them is increasing their capital expenditures, but you'll notice something. The higher they raise it, the more stocks drop. People worry this endless capital spending just keeps growing, but whether this money can be recouped is now uncertain. So watch NVIDIA. Their OpenAI investment hit $100 billion. It was cut 70% to $30 billion. This puts pressure on OpenAI's cash flow, but it doesn't mean AI is a bubble. It's not that pessimistic. We just see big investors like the four major CSP companies keep spending capital, but in the end, whether this money can really come back, I think it's going to take some time to observe and see. Now, what about NVIDIA's stock price? NVIDIA's stock price, looking at these two trend lines, is currently consolidating within a range. Just like I reminded everyone last week, the story of range-bound trading. When will it break out of this range, and what will happen then? Oh, by the way, good night to my I Love Jalen fans. Are you still saying good night? So when will this range-bound market break out? It'll be around February 26th when the earnings report is actually released. Will it break out upwards or downwards then? At that point, it'll be very, very clear. But before the earnings report comes out, right now it's just consolidating in this range. Just remember this range. When the price is near the lower end, look for buying opportunities. When it's near the upper end, gradually start selling. The price range here isn't very big, not very big at all, just about so much. It's around $30. You can see the price difference on screen. Buy low and sell high, then wait for the earnings report to see if it beats or misses market expectations. If it misses, the price might drop below the 200-day moving average, so watch those high-priced stocks. Happy New Year! Tongue pain is tough. If yours hurts, take vitamin C or B2 at night to see if it helps, really. But I just bit mine. If you keep biting the same spot 3 times in a row, like just now when I was talking during the market analysis, maybe I was speaking too fast and I accidentally bit my tongue again. So I think maybe you should try switching sides when you eat. After a while, you'll be less likely to hit that spot. You know, like I just said, if you always eat on one side out of habit, it's easy for your jaw to shift that way. If you keep eating on that side for a long time, you might accidentally keep biting the same spot. You need to try eating differently. So when I get home, I want to see if I have any vitamin C or B2. If I do, I'll take some. But this isn't a mouth ulcer, okay? It's not because of too much internal heat or lack of sleep or because my mouth or tongue is sore or has an ulcer. No, it's just simply biting myself, accidentally biting myself, that's all. All right, what did Miss Zhu say goodnight about? Kondratiev wave. Why is Zhou Qi called Kondratiev wave? Is there a theory that Zhou Qi will crash hard? As for this Kondratiev wave, I've never heard Zhu Ji mention it, but I have heard of the Poland coefficient and I've heard of wave theory. But as for Kondratiev, I'm seeing this for the first time. Maybe the English translation is different or something, I'm not sure. Someone asked if ChatGPT is cutting capital expenditures, but I see no evidence of that. Market news is currently a mix of rumors. One moment it's about high spending, the next it's revenue projections for 2026 or 2027 reaching $100 to $200 billion. Anyway, when it comes to GPT as a topic, first of all, we think that AI currently isn't in a bubble. There's no bubble in AI right now. Second, as for the dream they're selling, whether this dream will come true this year, next year, or not until 2028, nobody knows. All we can do is keep watching. We need to see if major companies continue investing in CapEx or partnerships. If so, development at OpenAI, Anthropic, or Gemini remains strong. Things look good, so there's no need for pessimism. We haven't seen a big hit to capital expenditures yet. There's no news of that right now. The wound is so painful, it feels like smoke is coming out. It's just too painful. Sometimes I use that oral ointment for mouth sores, and it actually works pretty well, though I don't know what it's called. Is it Kuku Ningen, or I can't remember if that's the name or not. Anyway, I use that clear gel and it actually works pretty well. Yeah, biting your own tongue, is that a sign of heatiness? You can check it online. Is that a sign of heatiness? Does that mean I haven't had enough time off? I guess I haven't rested enough. Zhang asked if Trump's 15% tariff starts tomorrow. Yes, it's expected February 24th. It doesn't really matter if it does. If Plan A fails, they'll use Plan B. Since IEEPA is out, they'll still impose tariffs via Plan B. They definitely still can. Overall, it doesn't have much impact. But keep an eye on Nvidia's investment in this company. Thanks, Miss Sue. We're all just here interacting and sharing ideas. Whether you're following US, Taiwan, or any other stocks, pardon my stumbling today, it's all good. We're just online having optimistic conversations. If you gained something from this, I wish you the best. Number matter your investment choice. I hope you keep getting better. That's what it's all about. Yuana Security's biggest support, and how should I put this? Our greatest sense of achievement probably comes from everyone in the live stream room being willing to like, subscribe, and share, and then everyone forming a really positive interaction. I think that's what it's all about. That's how things will keep getting better and better, really improving. So make sure to share this video as much as possible so more people can learn something, avoid unnecessary detours, or take steps to manage risks. Whether it's joining Mr. Fan's morning call group or tuning in to Yawanta's Good Night program in the evening, I think everyone can gain something from it. I'm not saying it's only me. I can only say, not everyone will necessarily agree with every point or theory, and it's not guaranteed that everything is 100% correct. Things aren't always that certain. But if everyone listens more, watches more, and exchanges ideas with each other, I think we'll all grow together. All right, so let's get back to what we were talking about, okay? So the CRWB, right, NVIDIA's investment subsidiary, the sun, so to speak, what problem did it run into? Well, there was a media outlet, Business Insider, that reported that CoreWeave's debt rating didn't meet the required standard. Originally, there was a capital firm called Blue O, like Blue Eagle, I guess, or you could say that Blue Capital Company. Originally, they were working with CoreWeave in Pennsylvania on a project to set up a $4 billion data center. But then rumors started going around that this Blue Eagle Capital Company had approached several investment institutions to join in on the investment. But these institutions refused to invest together to participate in this loan to CoreWeave. Why? Because they believe that CoreWeave's debt rating is basically junk status, and it didn't meet their standards, so they weren't willing to join in on this financing deal. Refusing this loan creates a funding crisis. They planned for $4 billion, but since no one joined the syndicate, that money's gone. Now, only the Bluebird can help, because the Bluebird originally wanted to bring in other companies, basically other lending institutions, to join together and provide the loan. The idea was to lend to ColdWave, and then everyone would profit from the related financial or investment growth, interest, and so on. But if these companies are unwilling to participate, then it turns into a problem. Bluebird needs $4 billion on its own. Is that even possible? They claim it's no problem. As for the Owl, they've seen no financing issues so far. Notably, before March ends, the Owl plans to secure $500 million in bridge financing for this project. They'll likely secure that $500 million. It's just that $40 billion, if the rumors are true about this $40 billion joint case, and some companies aren't willing to join in, then that means that the market, these loan investors, these lending institutions, have pretty big doubts about investing in AI, especially when it comes to large-scale investments or deployments. Or maybe they're worried that if you make such a big investment, you might not be able to pull it off. They might not be able to recover their investment effectively or quickly, which is why they're reluctant to take part in this financing deal. Okay, so this is a huge variable in the near future, and because there could be changes with this investment case, even though both sides say there are no issues, both sides insist everything is fine. But you have to remember, like I always say, where there's smoke, there's fire. Just keep that in mind. Where there's smoke, there's fire. So just pay a little attention to it. This could have a relatively big impact on the stock price. Also, why do I say where there's smoke, there's fire? Do you know why? Their CEO and president, Michael Intrator, yeah, that's a bit of a long name. Michael Intrator actually sold his own company stock on February 11th. He sold $7,720,000 worth. It's not much, about 200 million Taiwan dollars. But when CEOs or top execs sell their stock, that's rarely a good sign. Plus, Nvidia cut its OpenAI investment from $100 billion down to $30 billion, a 70% drop. Even the rich parent is pulling back. They're scaling back investments, so if that $4 billion gets approved, we'll just wait and see. Technically speaking, on this news, the stock fell 8.12% yesterday and last Friday. Right now, the downtrend remains unchanged. The trend remains bearish. Despite its rich parent, the long-term trend since last June shows each peak is lower. Short-term, watch the 50-day moving average. If it holds, there's support. If it breaks, be cautious, as consolidation may drag on. That's the COVID-related update. As for the Amazon topic, just take a quick look at it. Morgan Stanley said something about raising the target price, saying that Amazon stock price is currently undervalued. According to the peak ratio, which is the price earnings to growth ratio, they calculated that it's trading at a 40% discount compared to its peers. And if you look at the price earnings ratio, it's only 19 times. Basically, Morgan Stanley is just saying Amazon is awesome, and that's that. Right now, its growth potential is high, so the price is undervalued with a $300 target. But is that really cheap? The issue isn't the low peg or a 40% discount, none of that. Its fundamentals are also very strong. In terms of overall revenue growth in e-commerce and other areas, its revenue outperforms everyone, even Walmart. I remember seeing a report that said it made $177 billion in sales. Let me think. I checked the news last week and it said Walmart was at $173 billion or $171 billion. Anyway, Amazon's annual revenue from e-commerce has already surpassed Walmart's. So this is actually a pretty interesting turning point. Why did Amazon's stock drop? After falling for 9 straight days and rebounding slightly, the main cause is the $200 billion in market-wide capital spending. Since every company is outspending the last, investors worry about returns. Fundamentally, there isn't a major problem. It's just that the high capital expenditures scared everyone, that's all. So with these things, whether it's the Magnificent Seven or some AI companies, honestly, in the short term, the market does need some time to gradually digest this negative news. But if you're asking whether in the long run this will lead to a crash or an AI bubble, I think right now, it's not necessarily that pessimistic, not as pessimistic as people think right now. I don't think everyone needs to worry too much about it. So at the moment, the short-term issue seems to be that capital expenditures are too high, and the positive cash flow is coming back slower than everyone expected. That's why the market has some doubts, which leads to some selling. US pre-market gainers. Domino's Pizza is up 6% on positive earnings. Corning rose 3%. Paramount gains 1.59% to 2.84%, while Merck added 1.4%. No losers today. Pharma stocks are performing well, with some up 3%. Jinandai also saw a slight uptick, rising 0.8%. On the downside, International Paper dropped 6.21%. Also, companies like APP fell 2.6%, and Bitcoin exchange Coinbase is down 1.9% in pre-market trading. Robinhood is also down, falling 1.7%. AMD and Micron dropped 1.5%, while TSMC fell 1.3%. Pre-market trends suggest tech stocks will face pressure today. Because there's been talk about some AI volatility, there's just a ton of mixed news out there. So for the US stock market, it looks like the upside is limited. Like I just mentioned with Domino's and some pharmaceutical stocks, they're up, but the declines are hitting some major tech stocks. So today, it seems like the US market is more likely to see a bigger drop. The chances of a decline are higher. But as for whether it'll drop a lot or even crash, probably not, but a drop is more likely today. That's the pre-market stock rundown. The Dow remains strong, staying above monthly and seasonal moving averages. Per the Dongfeng line strategies, both lines show a bullish trend. Friday, it rose 0.5%. The Philly Semi-Index gained 1.07%, driven by Nvidia, TSMC, and Micron, which supported the market. As long as these major companies don't go under, like Intel, Broadcom, Qualcomm, Micron, SanDisk, even TSMC and Nvidia, if they're all still holding up, then the way the Philadelphia Semiconductor Index moves will still be relatively strong and resilient. A strong, resilient market supports Taiwan stocks, as 60 to 70% of the market follows the SOX index. The Magnificent Seven are likely due for a short-term pullback. This blue neckline is holding well, with additional support at the 200-day MA. Overall, I see this as a standard correction. If the US stock market wants to keep up its strong momentum in the future, the Magnificent 7 stocks still need to play the key role as the confidence leaders. Alright, that's all for the group-related content. We've been talking for about 50 minutes now. If you have any investment questions, feel free to leave me a comment. If I didn't get a chance to answer your question today, I'll add some extra explanations in tomorrow's class. When class is over, remember to like, subscribe, and share for us. Wishing everyone smooth trading, and I'll see you tomorrow.
Our company has no improper financial interests in the individual securities recommended or analyzed. The information in this program is for reference only. Investors should make independent judgments, evaluate carefully, and bear their own investment risks. If you don't want to miss the latest market updates, be sure to turn on the notification bell and hit subscribe. In addition, we have plenty of great video content on both Facebook and YouTube. Don't miss out. In our group, we share in-depth explanations of global financial events with you every day.